In today's weekly Forex forecast, we're going to be breaking down all of the major currency pairs along with gold, oil, the S&P 500, as well as Bitcoin. I'll be showing you exactly how I'll be approaching the market this week using my past 6 years of experience trading supply and demand zones. So starting off with the US dollar with the 4-hour chart, we usually do top down, but we'll stick with the 4-hour chart first. You can see massive manipulation below this trend line here, and we shot up with pretty much no issue. And the question is, why did we shoot up? Well, in my opinion, there are two reasons why this trend actually continued. The main reason here is the fact that we have not only a weekly demand and control back here, but these dotted lines here, this represents a monthly area of demand. I've been talking about this monthly demand zone for so long now. You can go back and watch my previous forecast and just confirm that I have been talking about this area. So in my opinion, that is why we have seen the dollar go up. I've received so many comments, oh no, the dollar is so bearish. Well, not really. Not when we have a monthly demand and control. And at this point, we have seen so much strength that it wouldn't be crazy to suggest we could easily pull up to this weekly supply where we can then expect to see the dollar really start to sell off. The other reason, in my opinion, we saw the dollar really start to rise is this daily chart here. You can see we clearly have a nice channel here that we are currently in. We did kind of peek out of it here, but nothing crazy. Seems like just some sort of fake out, and now we are pushing back into it. So we are looking for that next big move to pretty much target the top end of that channel here. And going back to the lower time frames, we have very nice trends, right? We have a very nice 1-hour upward trend line right now. It's holding very, very well. Remember, we have seen a lot of fake outs this past couple weeks, trend line fake outs like this, and an immediate push back up. So even if we break this trend line, we have to watch out for bottoming here to see if it's a fake out or not. But if we really start to shoot down, create lower lows, and obviously, okay, we could expect the dollar to maybe have a down week. But as long as this 1-hour trend line is being respected, I'm definitely going to be remaining bullish here on the US dollar. And I mean, we have so much room to the upside here. I don't really see much as far as the weekly time frame goes or the daily time frame goes to really hold up price significantly. So in my opinion, we need to be watching the 1-hour trend, the 4-hour trend line to really determine where the US dollar and the DXY is going to be headed. Moving on to the forecast for the Euro US dollar on the weekly time frame, looks like we pretty much topped out here. We could be definitely pulling back to this weekly demand. I think it's a great dip buying opportunity. Not to take the entire weekly zone, but when price pushes down into here, we will be talking about it in the forecast. So you make sure you hit that subscribe button so you don't miss any of my forecasts. And I would also appreciate a like if you are enjoying this video so far as well. So I think we easily could be pulling back down to this weekly demand zone. We will obviously be monitoring the daily time frame here. We came so close to this daily demand zone from back here. I don't know how I feel about it now. We could basically be saying, look, this is some sort of liquidity here. Like this. So I think this could be used for maybe getting some 1-to-1, 2-to-1, maybe 3-to-1 trades like on an H1 time frame inside of this daily demand. But I am not expecting to see, a massive push up off of this daily demand, that's for sure. But we could still be trading the zone. For a quick 1-to-1, 2-to-1 on, again, the lower time frames. We need to look for confirmation, though. I think that would be much, much better. Obviously, if we break this low, we will have some sort of trend line here, and that will be a significant daily downward trend line. And that daily downward trend line is really going to give us basically the direction of where the euro is headed. So we're going to maybe, like in my opinion, we will be testing this daily demand zone in this upcoming week based off of the price action that I have been seeing. So for now, we really just want to be day trading short on a 5-minute time frame as long as this 1-hour trend line is being respected. I don't have any zones up here according to my chain analysis. I'm not going to get into detail what that is, but I don't force zones. I have a whole system that I use, and I just don't see any zones up here. But if you're a day trader, we are in luck because we have a very nice 1-hour downward trend line, and as long as that's holding, we just definitely want to be trading short on a 5-minute time frame. If we break above this trend line and we have a 1-hour demand zone here, okay, you could be getting long at this demand zone, but again, aggressive trade management will be necessary because I just don't see where this could be headed. But if you want to trade short, like I said on the 5-minute chart, we have very, very clear profit margin, and that is down to this daily demand. So if you do get in short on the day trading timeframes, once we contact this daily demand zone, you definitely want to consider wrapping the trade up or putting your stop to break even, or just taking a percentage of your trade off the table, because we easily could be pushing up off of this daily demand zone. Like I said, might not be a huge move, but it could definitely be big enough to really take away some of your gains if you do decide to short the day trading timeframes with this 1 hour downward trend line. Moving on to the forecast for gold. So you can see on the weekly time frame, we are clearly selling off here, but look at how strong this trend is, guys. I've been talking about this for a while. Beautiful trends. It's been bullish on gold this entire time. This dotted line here, that represents a monthly demand zone. So look, I could see gold really getting a deep pullback over the next year or two and really pushing up. So it's definitely something that we need to take into consideration. And even on the daily chart here, you can clearly see the indecision right here. We are basically ping-ponging between demand and supply, and we're sitting right in the middle right now. So that's a big question, where price is headed. We expect, because of the weekly trend, we expect price to go up, but obviously it's not guaranteed. And the good thing is, if we break this low, we will have the ability to draw a downward trend line. I always prefer trends with trend lines because they act as a guide. So that's what I would prefer to start to short gold. I have no interest in shorting gold right now unless we can get that downward trend on the daily chart, because that downward daily trend would definitely indicate, hey, on the weekly chart, maybe we are getting that pullback down to that monthly zone. But with sideways price action, it's really not the best trading decision. You guys, if you go back and watch my forecast, we clearly talked about this 4 hour area of supply here. Definitely got a bigger move off of it than I did expect. I wouldn't have got this whole move. I would have been out at like a 1-to-1 or wherever I got lucky with my moving my stop loss to break even. But nice move off that supply. So now if we do push up to it and we break this supply zone, any demand there, that's going to be a good demand zone, not only because it removed a supply, but it removed a proven supply zone, meaning we got a reaction off it, meaning there was supply there. So if demand removes that supply, it's going to be a very, very significant area of demand. On the 1 hour chart here, we actually got a member who got a nice trade off of this zone tested area. So I personally wouldn't have taken that, but congrats to JS here, who caught a beautiful 1-to-4 trade with no partials taken. That's always great when you can get a nice risk reward with no partials taken and get a full 1-to-4. Absolutely picture perfect. So congrats to JS, who's been working really, really hard in the Diamond membership. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1 hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this trade has already taken place. If you notice, we have 2 fresh 1 hour areas of demand. Both of these zones, I would say, are mediocre to me. They don't really stand out too much. Like, they're not bad. The issue with them is that we don't really have a daily trend. That's kind of the biggest concern about these zones, is pretty much the higher time frames. So as far as trading it goes now, again, our higher time frames are up, so you could justify getting in long at any of these zones at 40, 47. You could also be looking for longs at this zone below at 40.15. I would say that this is the much better zone for 2 reasons. It's just a better price. It's a cheaper price. You can get a larger risk to reward. And not only that, it's below all of this liquidity here. So in my opinion, the higher odds zone would be down here, but you could also, again, be taking a stab at this zone. Let's say you want to trade both. How I would be doing it is simply this. If I get along in this zone, I'd be aggressive with trade management, meaning if we get a move to the upside, I'd be moving my stop to half risk, then to break even, into profit, right? Looking to lock in that gain. I would do the same thing for this short trade up here because we are going against a weekly trend. If you want to get in short up here, I think it's a great zone, has liquidity, nice move away. I like it for a potential short trade. But again, I'd be aggressive with trade management, just like I would be at this zone. But this demand zone down below, I think that's where we could see the bigger move, guys, especially because it's below all of that liquidity. So if you get in long at this zone, you could expect a larger risk to reward. So this is basically how I would be playing gold, all right here on this 1 hour chart. Moving on to the forecast for the S&P 500, we are in a little bit of trouble here for a couple of reasons on the weekly time frame here, guys. Obviously, we are pretty overextended, so we are quote unquote due, for a pullback. And something I noticed here is if you view this as a channel, which is something I recently started to do a little bit more just to kind of get a gauge, we are clearly over that channel. And this is not how I trade. I don't take entries based off of this, but it's a great way to view the trend. And I mean, we were high in the channel over here from back here. And I mean, look at what took place, right? So to see a pullback into the channel, depending how deep we go, it's really reasonable. So this pullback we're getting it's reasonable. It sucks for long-term investors. It's been a rough week for my stock account, right, or my long-term investing account, but that's fine. It's you just want to be buying the dip. But one reason we're kind of in trouble here is because on the daily time frame, we cleanly broke this trend line. I've seen a lot of trend line fakeouts this past week where price just breaks below it and then we shoot back up. This is not that. We have closed now 1, 2, 3, 4 times below this trend line. So that is a very, very bearish sign. The big question is are we going to be pulling up to the supply or not? And then once we get up there, the question is it going to hold? Right now, all signs are really pointing to the downside. And the issue is I don't see any daily demand or anything great or any weekly demand on the way up here. So usually, unless we get a pullback all the way down to this weekly demand, which we might not get, usually we pull back into a daily zone where we can get a reaction off of. We've kind of seen that on gold lately, but on the S&P, we just don't simply have that. So as far as getting in long for a trading setup, the only way I would be getting in long now is simply a break of this 4 hour downward trend line. If we get a demand zone there, okay, that would be our long trade. If we can get an upward trend, okay, then we can get in long. But until then, I don't see any pullback entries at all. So we simply just have to wait for some sort of confirmation to the upside to give us new zones to be trading with. As far as this 4 hour chart goes, you could be trading short as long as this 4 hour downward trend line's holding. I typically do not like to short the S&P 500 or any indexes at all. That's in my rules. But And why? Well, it's because usually we have a weekly trend, a monthly trend, a daily trend. We usually have all of that. But now we have a daily sideways price action, right? Price is going sideways. And that is the first step to create a daily downward trend. So in my opinion, it is a little higher odds now. It's still lower odds, in my opinion, to be shorting the S&P, but it is a little bit higher odds now, the fact that we have removed that daily upward trend. It's definitely a short, somewhat of a short signal. So as long as this downward trend line's holding, 15-minute time frame shorts are good. I like the pullback up to this supply zone at 68.32. I think it could be good for a quick move, maybe at 1-to-1, 2-to-1, 3-to-1. I do recommend a wider stop on this though because of this weird red candle here and the fact that it's kind of a small zone, one candle. So I think it's good for a quick trade. Higher up stop loss I think is preferred on that as well. And on the 1 hour chart, we actually have a 1 hour area of supply up at 67.45. I like the zone. The move away is obviously picture perfect. I'm actually not sure why this was created. I don't really look at why zones are created or whatever. Seems to me like it was some sort of economic thing. You guys can roast me in the comments all you want. That's fine. I don't care. I don't look at economic stuff. I don't care what Trump has to say or whatever. I just trade how I see the market. So if a supply zone up here, my point about that was that it's a very obvious zone. So a lot of the times we will see these kind of blasted right through. So we got to be cautious with that one, but could be good for a quick one, 1-to-1, 2-to-1 maybe. Confirmation on a 5-minute time frame. That's going to be preferred in this. And if you don't know what confirmation is, a couple weeks ago, I released a full course on confirmation. So it'll basically break down exactly what you should be doing inside of the zone if you want to pay attention to that. All right, moving on to the USDJPY. So we have been on an absolute tear lately on the USDJPY. We might be targeting this liquidity up here on the weekly time frame. It wouldn't surprise me to see another big spike in the USDJPY to target that weekly liquidity. There's really no good supply area up here either that we really could be looking for shorts from. On the daily time frame, we have a very nice but aggressive daily upward trend line. We have an older, very tested supply zone, nothing really great that we are about to be in contact with as well. Nothing I will be trading at. I would prefer to be trading with this overall trend. That is definitely much preferred. But if we do remove this daily supply, any daily demand zone there is going to be a pretty good daily demand zone for potential swing trades. On the 1 hour chart, we have removed this 1 hour trend line pretty cleanly. So in my opinion, this is not just some sort of fake out. We definitely could continue to see lower prices here in the USDJPY. So how do we go about and trade it? Well, at this point, we have no 1 hour trend. I'd rather be looking for longs. We are very, very extended here, as if you just view it as a channel again, very, very extended. We broke clearly above that channel, but we are right back into it, and I think we will be testing the mid part of the channel or lower. And would you look at that? Right in our channel is this 4 hour area of demand. And I mean, look at these move on the USDJPY. Absolutely picture perfect. One of the members got a beautiful EURUSD trade from the daily market breakdown video. So beautiful trade. Congrats to that member there. And right now we might be headed down to this 4 hour demand zone where I think it's a good dip buying opportunity. But telling the members, we've been seeing a lot of zones just do something like this. So I would definitely recommend a wider stop the next couple weeks until we can start to see normal market conditions again. It hasn't been terrible, but it's just something I've noticed where a lot of the zones we just spike through and we go like that. So that's why my stop losses have been a little bit wider than normal lately, but that's just adjusting to current market conditions. So yeah, you could short down at this daily demand, or sorry, to this 4 hour demand. Would make me nervous. I would just prefer to wait for this demand zone to be hit. You could look for day trades in here. It's a set and forget trade opportunity as well. Definitely a good zone. Even if we break it, as long as this trend line's holding, I think 15-minute time frame longs are definitely going to be much preferred here on the USDJPY. And if you guys want to check out my podcast, if you want help with your trading psychology, which is arguably more important, make sure you guys check out my podcast, the Stoic Trading Psychology Podcast, available anywhere you get your podcasts. I even made a YouTube channel for it as well. And again, it will definitely help you with your trading psychology, which is something that definitely benefited me these past couple weeks because it's been kind of rough. Alrighty, moving on to the GBPUSD forecast. We have a pretty old trend line here. It's very large. Don't love that, but it has to be drawn in my opinion. And look, this weekly trend could start to push up again. It's a little bit tricky. Obviously, we've just kind of been falling off of a cliff here on the GBPUSD. And on the daily time frame, we have a very nice daily downward trend line here that's looking very, very good. We have a couple daily zones from back here. These are older zones. This one was created back in last March, and this one was created in April. So they're both pretty old zones, guys. So I would more be using these as a target for short trades, right? When price hits the zone, I think we definitely could see a move off of it. So as long as this daily downward trend's holding, we could expect to continue to see the pound continue to fall. So I do personally believe that based off of this daily time frame, shorts are definitely preferred here. I don't mind these daily demand zones for, again, quick trades because they are counter trend. And I wouldn't just be taking the entire zones. I'd be waiting for confirmation. So we would basically be waiting for the zone to be hit, looking for an H1 zone to be formed and buying that H1 zone and looking to take profit as soon as we can because we're kind of catching a falling knife. But I mean, it's kind of two decent areas to try to catch that falling knife. But it's all about knowing how long to hold the knife for. Okay, so that's why, again, I'd be looking for quick trades, but nice daily downward trend. Definitely prefer to be trading with that downward trend. Now on the 1 hour chart, we have a nice 1 hour downward trend. I don't really see any trading setups here as far as zones go. On the 1 hour chart, we failed to remove that low. So the overall trend is down. I will definitely agree with that. We are clearly going sideways here though. So it's definitely a little bit concerning. If we do push all the way up to this supply zone, it's an old zone. Not as far as days go, but as far as this time frame goes, it's an old zone. I mean, look how long it's taken to pull back into it. If you notice, we have a very, very clear liquidity area before. I want to see another reaction off this liquidity. Then I think this trade could be a very good trade for a potential short trade. But if we go down and hit that daily demand first, then this trade becomes much, much lower odds. I'm just not seeing a whole lot right now on the pound. There is an old 1 hour zone from down here. If we break it, any supply there is going to be our potential trading setup here on the GBPUSD. All right, moving on to the forecast for the USDCAD. You can see beautiful daily upward trend line here, holding well within this channel. We obviously pushed to the upper end of the channel, pushed back down in, and we are reacting off of the bottom end of the trend line pretty well. So it's clearly holding up price, in my opinion. So it is longs all the way. We have a couple of options for longs. The nearest term long trade is at this 1 hour area of demand. I think it's pretty good. It's kind of a little hidden rally-based rally. Nice move away, type basing. I like it at 1.40. So that would be our nearest term 1 hour area of demand. Our other options are on the 4 hour time frame. So this 4 hour supply zone trade, I was telling members, it could be good for a quick 1-to-1. And like I was saying in the last Forex pair there, I've seen a lot of these fake outs like this where price is doing that. That's why I just said you might want to have a wider stop, right? And at this point, you wouldn't be out of this trade. It's just adjusting to market conditions. So this trade pretty much worked out already. You could continue to hold if you are short from the zone. Would make me a little bit nervous because it is counter trend to the daily. But we have a couple of options here on the 4 hour chart. We either want to wait for this supply zone to be removed, preferably the high as well, and any demand there is going to be a good dip buying opportunity. We could be waiting for demand zone 1 down below, a little hidden rally-based rally that removed a downward trend line at 1.402. I think it's a good zone, hidden rally-based rally. The much better demand zone is below everything, and it is below the liquidity down here as well, like this. This demand zone down at 1.394, that is the better demand zone where we could see that bigger move, especially if we decide to target that liquidity. I like the zone. It removed an opposing supply and a downward trend line. So it really has kind of everything going for it. So again, lots of options here in the USDCAD. It could be very, very confusing to you guys. And if it is, do not hesitate to leave a comment. I will literally respond to every single comment that anybody leaves on my channel if you have any questions. Moving on to the forecast for the Aussie US dollar. I just want to show you guys this weekly chart. This is a weekly chart. This is just a chart in general where we can't base anything off of it. There's no good price action, really whippy, no trend, no direction. This is absolute junk. So I just wanted to show you guys what junk looks like. This is it right there. The daily chart though shows a different story, and I actually have a trend line to update here. And in my opinion, the better this is the most safe trend line to be drawing right here. So we have a very nice daily downward trend line, and it wouldn't surprise me to get a break of this demand zone. You can go back and watch my previous forecast and see this demand zone drawn way back when it was over here. So this was a trade that I called out beforehand. You can go see the evidence. I actually had somebody say, I saw you adjusted the zone up here to make sure it was hit. And you can actually, it's funny because you can go back and watch. I had the zone drawn the same time before it was even hit. It's just funny. It's funny that people can go back and check for themselves and they don't even bother. That's laziness. Anyways, just a little bit of humor. Daily downward trend holding though. If this daily demand breaks, any supply there is going to be a great swing trading opportunity. But with this low broken here, this daily downward trend, it's really showing me that price is going to continue to fall here on the Aussie US dollar. We got a beautiful, picture perfect 4 hour supply zone trade right there. Absolutely picture perfect, called out beforehand in the daily market breakdown video for the Diamond members. I was actually showing them how I was managing the trade on the way down as well with the 1 hour trend line. So now we have a 4 hour demand zone back here. That was a nice trade as well. And this was a quick one, right? In and out because it's counter trend. Sure, you could be holding up to this supply zone. That's reasonable. It's just counter trend. So it would make me very, very nervous trying to hold the trade that much and that long, especially when it's counter trend. If you want to continue to trade with this downward trend, we have two options. We either want to wait for these demand zones to be removed. Any supply zone there is going to be a good setup, or we already have a 4 hour supply at 0.648. I think it's a great zone for a potential short trade as well. And we actually have another fresh, older 4 hour zone. This one was created back in the middle of summer in June. but it's fresh and there's a lot of liquidity here. So in my opinion, this 4-hour zone could be used again for another small 1-to-1 move, 2-to-1 move, just to make a little bit of money on those. I take many different setups. I take larger risk reward setups. I take lower risk reward setups like that one. And sometimes even lower risk reward setups work out for a larger if you bump your stop loss. So that's what I would be doing at these counter trend areas of demand. Like I said, this supply zone could be good for potential short trade as well on the Aussie US dollar. And on the 1-hour chart, we have a very nice 1-hour downward trend line holding here. So as long as this 1-hour downward trend line's holding, guys, we could be looking for shorts on a 5-minute time frame. Alrighty, USD Swiss here. We are approaching the highs here on the daily time frame. So we do prefer longs, but obviously it's a little bit sketchy doing that when we are so high in the curve there. A couple of options though on the 1-hour chart. As long as this 1-hour trend line's holding, I think 5-minute time frame longs are good. I like the trend. It's pretty clean. It's not too aggressive. I think it's pretty good. So it's a great trend line to be kind of acting as our guide. And if the trend line breaks, well, what that means is we could be headed down to any of these fresh 4-hour demand zones. So I don't mind breaking that trend line because we have a couple nice zones down below. Not my favorite zones ever. I much prefer this one at the extreme. Not any basing here though, so not the best situation. I'm not going to get detail why that's a zone or whatever. I'll save that for another video. This is a forecast, but a couple good 4-hour zones here down below. And if you notice, we also just removed this area of supply. So this is off the cuff here. You guys, hopefully you guys know I don't pre-plan these videos and pre-plan what to say. But we actually have another hidden rally-based rally. Not my favorite move away. I much prefer the move away from here and here. These are a little bit better, but it's not a bad zone. And if you notice, we kind of have liquidity here as well. So honestly, this is on the cuff, but it's not a bad rally-based rally for maybe a small move to the upside. When I say small, because I think the bigger move could happen from down here. But again, I don't think there's anything wrong with looking for a 1-to-1, 2-to-1. Just get more aggressive with trade management here, not only because we're at the highs, but because it's really not the greatest zone ever either. But nonetheless, a couple good zones here on the 4-hour charts we could be seeing some moves off of here on the USD Swiss. Moving on to crude oil. Looking at the weekly time frame here, we have liquidity on the weekly chart. We have clear area of support. We are looking to target that liquidity to pull back down to this weekly demand at 53.83, and that is when I'll be looking for long trades at this older weekly zone. It's an older zone created in 2021, guys, but when we have liquidity before, it usually makes it a little bit higher odds. On the daily time frame here, clear daily downward trend line, so it's looking really, really good right now for short trades on crude oil. As far as trading it goes, we have a very nice 4-hour downward trend. As long as that's holding, you definitely want to be looking for shorts on a 15-minute time frame. However, and again, if you do a channel view here, look at where we're at, in the channel. Like, it would definitely make me a little bit nervous. Could we break out below the channel? Absolutely, but we might be pushing right back into it. So that's fine. We could get a trade, but again, you might be cut off. It might not be a larger risk to reward type of setup. What I think we could be seeing is maybe a pullback up to this 1-hour supply zone at 60.28. This made me a little bit nervous, but I still think it's a decent zone to look for a short trade again at 60.28. Even on the 1-hour chart, look at the channel view, right? Do this. Boom. We're at the low end of the channel, so we definitely could be pushing up, maybe even higher, again to test the higher ends of that 4-hour channel. So we definitely want to be continuing to day trade short on the 5-minute time frame as long as this 1-hour trend line's holding. And again, I like the pullback up to that 1-hour supply zone there as well on crude oil. Moving on, last but not least, to Bitcoin, and this has been absolutely tanking, but that's okay. This seems like it's just what Bitcoin kind of does. We still have 2 days until this trend line will be removed, but right now it is obviously not looking too great for Bitcoin, guys. We do have a potential supply zone here forming. I wouldn't call it supply yet. We pretty much need to see this candle close, but obviously it is looking very, very weak, but that is completely fine because we have a very high quality demand zone down below with a liquidity trap potentially before. So I think we could pause here, react off of this liquidity, and then pull back down to the demand zone and get a nice trade off of it. That would be like the ultimate best move right now on Bitcoin. And decent dip buying opportunity just for a long-term hold with no stop loss as well. If you're into investing Bitcoin, I think it's a great opportunity, especially since we have blatant liquidity there. I think it's a high probability area of demand. So we could be targeting that liquidity to the downside. I think, yes, you are kind of trading against a higher time frame trend, but I mean, when we have a weekly trend to the upside technically, and we're going sideways, that's one thing. But the fact that we have a very clean daily downward trend as well, that's another thing. And that's definitely very, very bearish to me. So as far as trading Bitcoin goes now, I would pretty much be focused on the 4-hour chart. We are a little bit overextended to the downside, but the good news is we have a couple 4-hour supply zones above. I always prefer the one higher if it's a decent zone, and it is at 94.76. I think that's a pretty good zone for a short trade. We could also see a move off of this zone as well. And again, if you want to trade both, you can be more aggressive with trade management off of this one rather than that one. I think that's more reasonable. But again, you could trade both. You could simply, like, if you take both trades here and both lose, you're only down 2%. You take another trade that works 3-1, you're up 1%, right? So it's tough seeing level on top of level like this. I get it. It's hard to pick. If you want to pick just this one. I think that's reasonable. Pick just this one. This one, I think, technically has the better move away because it's a bigger, greater move away. But a couple good zones here on Bitcoin to really just continue to trade lower and target that weekly area of demand. But again, if we pull back down this weekly demand, that is our long signal. If we break these supply zones on the 4-hour chart, that is our long signal. So we got to be prepared to get in long. But for now, I think shorts are going to be kind of our best friend with the downward trends. We just might want to wait for, some sort of pullback because, again, we are pretty overextended here on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.